Hey everyone, I'm Charting Man Dan. I've been trading for the last 14 years. We're going to check in on the charts and the markets after a very red day out there. We can certainly say we're seeing things we have not seen in a number of years, really since the COVID dump. We'll talk about what those things are, what we're looking for in the short term, how we're trading this volatility. First things first, the narrative as to what's going on. Last week, the narrative was jobs numbers, recession, yada yada. Now everybody says, oh, this is a bit more significant than that. And now you're going to hear a lot about the Japanese yen and its impact on the indices. And so we'll look at that chart as well, but let's get into it. So my approach heading into the week was, I want to know if this is the same as last time on the S&P 500 consolidation in April or different. And obviously, with the huge open to the downside today, almost a limit down, things are different. And this is definitely a sucker punch. You've heard me talk about sucker punches before, normally on the shorter term time frames. This is definitely it happening on the weekly time frame. What is the definition of a sucker punch? It's when you have a clear bull control, grind up, complacency. Bulls don't have a thing to worry about. They get used to buying every dip. They get overconfident, over leveraged in longs, and then we see a big flush. Everybody gets surprised. It's out of nowhere seemingly, and over leveraged longs that have bad risk management, whether it's a hedge fund, whether it's individuals, they get liquidated. And the most important information that comes from that flush is, do we confirm the downtrend as a result? When it happened here, the answer was nope, we flushed and then we kept going. And what we would have to see is, can we confirm the weekly downtrend for the bears? Because the last time we confirmed a clear weekly downtrend, that led to multiple months of consolidation. And so whether or not we confirm a weekly downtrend once the next weekly bounce gets going, and then we'll talk about what are we looking for the weekly bounce to get going, but bigger picture perspective, that is the next most important information that the market is going to give me in August. So we'll be watching what's the bounce retracement size, and it's all about whether that low confirms. And a lot of bulls use that capitulation low as a stop level, saying, well, if we don't come back down and break that level, bulls don't have anything to worry about. That's a flush out, and we're going to keep heading up. So obviously there's concerns at this point. Bigger picture, just a note, when you have a volatile day like today, I see people calling out their brokers specifically on Twitter and very frustrated, and being frustrated is certainly understandable, but it's all brokers. This is very normal. We come into today telling everybody, hey, just so you know, your orders probably aren't going to work well to start. My market order didn't fill on Fidelity right away, and then a couple minutes later, it filled back at the price I hit it at, fortunately, but, people couldn't log in. You had to be logged in pre-market. I was logged in on Fidelity all morning. People tried to log in at the open and couldn't do so. So it's Fidelity, Thinkorswim, Schwab. Everybody has issues. You anticipate the issues when there's this much heightened fear in the markets. Daily chart, we got a long lower wick. Is that capitulation volume? Well, I don't like using this instrument for volume. Let's look at SPY. So SPY volume, we know bears are not sneaky. If you're going to see big drops, you've got to bring big volume with it. And this is the highest volume day that SPY has put up in a very long time. So that's not enough. That's a bit of information. Now we need to see, can the bulls confirm an hourly uptrend? So we had the nice bounce on the open, definitely looking long on the open just because it's such a sizable gap down. The only thing that I liked looking for short on the open was healthcare. Talked about that in the Twitter video. Again, make sure and follow us on Twitter if you're not. Post that week ahead video in terms of what we're looking for. We then topped out. We set the hourly high or low right at the end of the day, and now into tomorrow, can we confirm the hourly uptrend? If we do, we will zoom out and we will look for a daily lower high to be the result of the bounce. But if we confirm an hourly uptrend, that to me will say, okay, this is a temporary capitulation bottom being set, and fear is going to subside a bit from here. Don't have that confidence to say that right now because we don't have an hourly uptrend confirmed. Traded in both directions, like I said. I'm not going to be able to, I didn't bring up the posts in advance, but we were looking for, how do we know to look short? Well, we know that we're looking for a futures 4-hour oversold bounce. We're looking for a 4-hour lower high. We have EMA 12 resistance as one puzzle piece. Back burners, first 15-minute overbought conditions. I exited my long, my running long position right up at that high because 15-minute overbought was my target. I then grabbed some shorts because of the 4-hour lower high and just wanting to protect, knowing that we had just bounced 3 or 4% in most of the indices on the morning. So double bottom at the low of overnight, pre-market, bulls buy first thing, nice and clear uptrend, 15-minute overbought. Again, use those back burners in both directions. We're going to be looking for hourly overbought. When the daily bounce gets going, we're going to watch for hourly overbought to potentially mark a daily lower high. Again, that bit of information itself is not enough. It's enough to take some profit. It's not enough for me to initiate an aggressive short or anything like that. Again, it's just a piece of the puzzle. I look at that and then I say, okay, now I keep an eye out for a bearish pattern. NASDAQ ended up having a 15-minute head and shoulders coming after 15-minute overbought. So on days like today, unless you're looking to be real aggressive, size down your positions, because we certainly have Apple today went plus 7.7% in the first 18 minutes of trading. How many times have you heard me say this in the last year? This is not a normal market environment. That is an absurd move for something that has the market cap of Apple. The movement that NVDA is seeing, NVDA is trading like a small cap with the amount of volatility that it's seeing. It just means be cautious. Not scaling in to positions blindly because we're extended. I always have to have a level to play off of nearby. I want to know if I'm wrong really quickly. And the only way I'm going to know if I'm wrong really quickly is by making a statement such as, at the end of the day, I said, this needs to be the hourly high or low. I was looking at QQQ. This needs to be the hourly high or low on QQQ, or bears are going to head into tomorrow confident. And, again, it wasn't enough for me to go aggressive into the end of the day and along, but it's just a simple statement. If that's the hourly high or low, we've got a chance to confirm this hourly uptrend and get the daily bounce going. If it breaks and it's not the hourly high or low, then the bears gain probabilities in their favor. So all about the hourly into tomorrow on the NASDAQ and the S&P 500. Semiconductors filled the gap on the bounce. Again, the weekly time frame. This is a sucker punch. Do we confirm the weekly downtrend? From here is the next question. So filled the gap on the gap down open. Same thing though, we need the hourly uptrend to confirm. If the high of today breaks tomorrow, hourly uptrend confirms. I then zoom out and I'm going to watch for hourly overbought. I'm going to watch for a daily lower high, anything under 247.69. We're going to watch the bounce retracement size. Is it 50% plus? That creates space for a daily trend change attempt. Do we break the high of today tomorrow with no follow through and keep a daily bear flag on the table? Another headline to be watching for is the potential that Iran's going to attack Israel. And we keep hearing today, tomorrow. It reminds me of the Ukraine invasion. So just be aware that the more we know it's coming, the more it gets priced into a certain degree, but also something that we have to be aware of in the short term that could add to even further volatility. Tesla. So Tesla, we're watching this 3-month forever equilibrium for a very long time. It looks like a 3-month lower high may be shaping up. If it does, we're watching for this pattern to break, probably in 2025. What we need for that 3-month lower high to be convincing is a weekly downtrend. Technically, this is still a weekly uptrend. Remember this battle we had at 180? Back and forth and back and forth. I tried to long that level 3 times and stopped out break even before we finally got the real move. Well, we just back tested it and held it. Gap down open. Bulls bought it, at least for now. Bears must confirm a weekly downtrend next time we start bouncing. Again, it's one time frame at a time. Need an hourly uptrend, need a daily uptrend, then we go to the weekly. But if we confirm the weekly downtrend, that's a 3-month lower high likely being set. The most important levels here, 138 and 300. Recent tops important too, 271. So hourly, can we confirm the hourly uptrend tomorrow? If we open higher tomorrow with a gap up open, I'm not looking long. If we open lower tomorrow and we have the lows of today as a support level to potentially play off of, I'm much more open to be looking long. So it all depends on what happens overnight tonight as far as how we're shaping up tomorrow. XLV. So the trades that I was looking for today were short XLV as a laggard bear, looking for bears to jump on things that had not rolled over yet. And we were watching this rising wedge from last week. Short the VIX. We'll talk about that when we get there in just a moment. And of course, long QQQ semiconductors for at least a short-term relief bounce, which is what we got. So We close on XLV, lowest price that we've seen in a couple of weeks. Still a weekly uptrend. Not going to lose sight that anything above 142.73 is a weekly high or low. But again, you open today. I wouldn't like looking short anything that's seeing a significant gap down open, but something that has not started weekly consolidation yet. That's the laggard mindset of saying, okay, bears are clearly proving something across the market. Where can I look that hasn't dropped meaningfully yet? And same thing, bears will have to confirm a daily downtrend if they're going to take over in a meaningful way. Remember 2022? So what's different about this with COVID is this is not nearly as weak. COVID, we were halting down. It was free fall. We had no idea what the implications were going to be in this completely black swan event, something completely new that we've never experienced in our lives. What we're seeing right now isn't at that point or even close to that point right now. Fear, yes. Longs, over-leveraged confident longs being liquidated, yes. Japanese yen easy trades in the VIX and the yen for years, no longer easy and blowing people up that got overconfident in that trade, yes. But again, still not anywhere near. I mean, we're in monthly uptrends still. The S&P 500 is 9 or 10% above where we closed last year. That's an average year. So again, I'm not ready to say everything's about to fall apart, but obviously after this kind of move, we are heightened and paying extra attention after that period of complacency. But we are still in monthly uptrends, and that's what we're watching for now. What did I say? Difference in COVID, difference, I forget. XLV, XLF. So XLF, technically still a weekly uptrend as well, heading down to the 40.37 support zone. We're going to be watching for a head and shoulders again. That's what I was doing back here. Is this a weekly head and shoulders? Nope. Okay, let's do it again. Is this a weekly head and shoulders? If we hold support and bounce, maybe. Got to be watching for it. Double top to the penny before a massive dump. But, if I'm going to make an attempt at playing off of the support, this is definitely a support zone to be watching. And it held today, but again, a weaker bounce. Bulls want to see semiconductors and NASDAQ leading the bounce. They led the way up initially. They led the way down. They want to lead the way back up again. Ideally, bulls want to see everything going up together, of course. But at the moment, today, it was a much stronger bounce from the lows. Semiconductors, NASDAQ, stronger than financial and healthcare. IWM. So big red flags at this point. First red flag was giving back the FOMC reaction when SPY and QQQ did not. As soon as I see this upper wick candle, I say, why? We got to watch for a rising wedge. And I look at the weekly and remind myself it's been a 6-week stair step. I had a target of my swing position on IWM of all-time highs. We came within 3% and we failed. And recognizing the red flags and adjusting the game plan is really important. And so the first red flag was the potential for a rising wedge, the fact that we had not seen weekly consolidation in 6 weeks, and that tells me, okay, I shouldn't be surprised at all if we see weekly consolidation from here. Lost the daily uptrend at 220.77, another red flag, closing below daily EMA 12. My statement was, I'm going to be aggressive IWM long as daily EMA 12 is support. So we're getting all these red flags before things got really ugly with multiple gap downs. Took position off, still have a little position, break evens in the 170s. So at this point, just enter 190s, sell partial on the way up. But at this point, just risking giving back what were nice gains. Obviously, those gains have been chopped down massively. Same deal. Is this a weekly head and shoulders? If we can get a bounce going from here, again, not taking a bounce for granted and just going to assume it's going to happen from here. Got to get the hourly, got to get the daily. But just looking ahead a bit. All I care about tomorrow is the hourly. All I care about this week, if the hourly confirms, is then the daily. When do we set that daily low or high? The VIX. I used to look at the VIX in every video. Some of you have been watching for 7 years. Remember, every single video. And I stopped because the VIX didn't give me any information. Essentially, it spikes up big when all major sectors hit the lows at the same time. Okay, I'm just going to watch all major sectors. I don't need the VIX. But what this chart shows us is if you short the VIX on every spike since the COVID move, it is the right decision because we just slow bleed and give it back. Every single one. That's a dozen trades. That's the right decision. And this is one that if you just keep doing the same thing, you have to in markets prepare for the 1% chances. The things that happen 1 in 100 times, because those are the things that will blow you up if you don't protect. Remember when the volatility ETF, I forget the ticker off the top of my head, broke and stopped working? I didn't know that was possible until I witnessed it. But we have to protect against these things. And so the people that got used to the same easy trade over and over again got smashed. But those that were cash know volatility on moves like that generally tops out. So SVXY was a top watch this morning. I ended up just going with TQQQ. And because the orders were, taking some issues, taking some time to process on Fidelity, I didn't want to overextend myself, but had a nice, the move from the open, had a very, very worthwhile move. Again, you got to be selling into these moves, at least partial. 22% in a couple hours, you sell some into that move every time. If you want to let it play out bigger picture, that's fine, but you stick a stop loss where you're in full control of that trade at that point because you took a nice amount off into that initial move. But if the VIX isn't topped, then it's big time trouble for the market. We would need to go plus 100% from the low of today to get back to the high. Generally, this is where I start to look for some equilibriums, but if that's not the high, then definitely bigger picture red flags in the broader market for me. The dollar. So the dollar confirmed a weekly bear flag and rolled over. Shouldn't that be bullish? Metals, equities, crypto, and the Russell. Generally, most of the time, yes. But why is the dollar dropping? The dollar is dropping because DXY is dropping because it's measured against a basket of currencies, and the yen is seeing a short squeeze. And so because the yen is rocketing off the lows, again, look at this chart. If you short the yen, easy, 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 big bounce, easy, 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 get complacent, and then you get squozen. So big move off the lows. Look at the daily RSI. When's the last time the JPY USD chart has seen an RSI over 80, let alone hitting 90 or reaching 90? It's been decades since that has happened. So this is a once in a decade. The severity of the move off the lows on the daily time frame, we could say it's a once in a multiple decade occurrence, which again catches people by surprise. And the narrative for the Japanese yen as to why it's leading to this sell-off in the markets is because if you borrow the yen, buy other things, you get margin called, you got to sell other things to meet these obligations. And so essentially that's what many people, that's the new narrative. When the narrative of the jobs number is okay, maybe it's more than that. We need the new narrative now. Again, I don't really care about the specific narrative. For me to understand, overconfident, overcomplacent bulls in a melt-up market for a year and a half, seeing insane gains, where Microsoft is up 100% in a year and a half for such a large cap company that is not normal. NASDAQ up 60%, whatever. Semiconductors ripping into oblivion. Overconfident, over-leveraged longs get liquidated. Happens in crypto all the time. It doesn't happen in global markets all the time, but it's the same thing. Metals, generally when you get a wave of fear, everything sells off. I thought metals are supposed to be a safe haven. Well, go back and look at 2008. The metals dumped with everything else. Then when the dust settles, you see where capital is shifting to. You can recognize relative strength, relative weakness. But the first initial wave of fear, everything is hit. And in large part, it's because of liquidations and having to sell things. Again, nobody wanted to sell today when the market opened, but some people were forced to do so. And so everything gets thrown out on the initial wave of fear to meet those obligations. We've been watching this gold potential rising wedge on the weekly. We know it has less confidence because it's up at all-time highs. Rising wedge up at all-time highs has less confidence, but it is still a rising wedge to be watching. And if we drop down and break key support on gold of 23.53, we will lose the weekly uptrend. I've been saying for months now, bulls have full control if weekly EMA 12 is support. And it is still support, so they're keeping full control at the moment. But again, we've got enough signs in the market to say we should be more cautious about this. We need to be paying extra attention. And gold is among that as well. Silver has been way weaker than gold. Look how different that chart is. Weekly downtrend confirmed. Bears in full control. Fresh low on the daily today. I am watching this downtrending support line, but that's just, a little visual guide to see if it stays in play. But selling off hard. Miners selling off hard. Bulls bought the gap down open. They're trying for a weekly higher low, but obviously still a big drop. Is this going to be a weekly head and shoulders? Determine what time frame matters most to you. I care about the hourly for tomorrow, care about the daily for this week, care about the weekly for this month. Swing trades, I care about the daily and the weekly. Day trading tomorrow, I care about the hourly. And by breaking up my accounts, IRA swing trading, which definitely has been getting hit hard, I went from trading very well. I even navigated this top really well. Grabbed some nice hedges at the top, did some reloading, got another good one, shorted Thursday morning. Let it go way too early. I let it go 460, I think. So big mistake, big lesson learned there. And what that means is my IRA went from all-time high last week to big 3-day drop. I haven't even looked yet today because I know it's probably going to be the biggest drop that my IRA has ever had. That said, I've had the biggest gains that my IRA has ever had multiple times this year. So you can't have one without the other. So lesson learned for me, taking that hedge off way too early. Had some real good hedging on the way down, making money while the market was dropping and my portfolio was mostly long. But the flip side is, when the market's melting up in 2024 and I'm looking at the majority of my net worth, half of it, sitting in a cash account in my day trading, which I use each day, but it's sitting there and earning 5% is something I've never experienced before in my trading while the cash sits there. And that's been beautiful. Huge uptick in income that I was not expecting. So learning about the macro, but should this be in positions? I'm missing out on all this move. Should I just buy SPY and QQQ and hold it? And then you get this kind of move. And that's why I always love being cash with a day trader mindset. And, my much bigger day trading account is still at all-time highs. It's been hitting all-time highs last week and now again today. And that is my sanity, because if I was, if half of that was in the market in addition to my IRA, I would be sick to my stomach over the last week. That is for sure. So that's just my style and how I approach things. I use the day trading to soften the blow of the swing trading drops, but overall day trading remains my top priority. Swing trading is something I'm practicing, getting better at, letting the IRA play out, longer term time frames, but done rambling. Oil, down to weekly support. We've been watching this equilibrium forever. If this rolls over and breaks bear, the energy sector is a potential monthly rising wedge, XLE. So again, just grinding up, but we just confirmed a quick little monthly downtrend. Next major level, 77, 73. The bears won't follow through here unless oil breaks. And we are right at that support. If I'm looking at this setup with an equilibrium, I love trading equilibriums, I really don't want the support to break here, even if I'm all cash. Why do I care? Because I know there will be a better trade if we keep tightening up. I don't want to short a bear break of a very clear long-term pattern if, to even get to that support level to trigger the short, we're already down 15%. I do not like that risk reward. If we hold it and keep tightening up, give me a 2-week bounce, I can then look for the lower high to have a better risk reward, or by the time we then break bear, we haven't dropped nearly as much. We're not nearly as extended to the downside. So just a little note on trading equilibriums, bulls have to confirm a 4-hour uptrend if oil is going to hold this weekly support in the short term. All right, fun day. Again, lessons to be learned, always lessons to be learned. And make sure you're learning them and writing them down and burning them into your brain, because this is going to happen again. And the lessons that you learn this time around can help you the next time around. Everybody massively fumbles, raging bull markets and raging fear the first couple times they experience them. The pro traders that make it full time are the ones that learn from those mistakes, and the second time those once in a 3-year, 5-year events happen, they smash it. They level up their account. They then have the capital to be full-time traders and go to patient and be more protective, shift off from aggressive mode. And I've just seen, myself and a handful of traders full-time follow that same path in terms of how it ends up playing out. So don't look at any losses or lessons learned in this market environment as wasted, because it will make you money. If you are persistent enough, it'll make you money the next time around. Do good things. Stay safe.